Are you thinking about selling your current house and buying a new house but don't know where to start? Then this video is for you. I get this question all the time. Should I sell my current house in order to buy a new one? Can I do it at the same time? Do I have to sell and then wait before I buy? Or where do I even start? How does this work? I get that question very often, and these are fantastic questions. And that's why in this video, I'll give you some guidance. So keep on watching. If we're meeting for the first time, my name is Peter Oreziak, and I'm a senior loan officer with Cherry Creek Mortgage in the Woodlands, Texas, and I've been helping people successfully finance their home purchase over a decade now. And in this video, I wanted to talk to you about being in a situation where you're thinking about selling your current house and buying a new house. Okay, that's a great question. Many clients are in that current position and really don't know how it works. Okay, so the first thing you want to focus on is focus on your current financial situation. So I always advise reach out to a local loan officer and they can help you and guide you through this process. The first thing you want to know is how much do you think your house is worth? If you're not sure, historically the house is appreciated in value about 4 or 5%. So let's say if over the last 5 years, the first 3 years I would have 5% appreciation, but the last 2 years have been insane. Last 2 years property values went up 30%. So for the year before I would do 10%, and last year 2021 I would do 20%. So once you have an estimated value of your current house, we need to deduct the current mortgage balance, the payoff, and from the sales price you also have to pay 7% roughly in Texas for the buyer's agents, the commissions for the buyer's agent, the listing agent, and then 1% for the title policy. The title policy is being negotiated right now, but it's still very common that the seller will pay the title policy, okay? So if you have your sales price minus the 7% in commissions and costs, closing costs to sell your house, minus the balance, let's say the amount that you come up with is 40, 50 grand, okay? So can you purchase a house without selling your current house? Well, that depends. It depends on two things. One, if you have the money currently in your checking and savings account to buy a house. And two, if you qualify to carry 2 mortgage payments. You don't have to sell your house to buy a new house if you can carry 2 mortgage payments at the same time and you already have the funds for the down payment and closing costs. If your ratios are too high, then most likely, and if the funds are all tied in equity in your current house, then yes, you will probably have to sell your current house to buy the new one. Okay, so let's say if after you do your numbers, and let's say you have 40, 50 grand from the sale, then you have 40, 50,000 to purchase a new home, and then you would have to make it contingent upon selling your current house before you buy the new house. And the way this works is you talk to a local loan officer, they take your application, get you pre-approved with that contingency. Okay, so we want to make sure, I don't know, let's say you're selling a house for $250, you have lived there for 5 years, you have 50,000 equity, and then you want to buy a house somewhere in 100 price range, then you can get a pre-approval already as an owner. Before you sell anything, you need to get the pre-approval from a local loan officer for the 400 price range with the contingency upon selling your current house. And then the way this works is the loan officer will look at the credit, will see if how much really you need to put down. You don't have to obviously do 20% down. You can buy your next home, which is 5% down plus closing costs. And then sometimes we might look at you want to make sure the loan officer will look at the credit report to see what other debts you have that can help you in the ratios. Let's say maybe you can pay off a car that has a $700 payment, but there's only 8,000 balance on it. That will definitely help you quite a bit in your ratios for your debt to income ratio, DTI. That's how much you can qualify for, okay? So once you have the numbers, once you have the pre-approval, and of course you have to have a great agent working with you, and with a great team, they can coordinate the whole process where in a perfect world, you can close on both of them on the same day. And what I mean by that is you would start in the next couple of weeks working on listing your house. You have the pre-approval, you can start looking for new houses. And what would happen is then both can go on the contract at the same time. You would have a buyer come in on your house, submit an offer, you accept it, and let's say it's 30 days out. It's easier to sell right now, but sometimes I would recommend if you're selling, I would do a 45-day closing, maybe give you an extra 2 weeks to sell your house, but you would have to get a contract on your current house, and then you would be the buyer on another property to buy it. And they can be worked on at the same time. You would have 2 different loans, 2 different lenders and agents, and you would have the buyer working on getting the financing secured on your house, and let's say closing at the end of the month, and then you would be already working with your loan officer as well to purchase, to close. And the processing, the underwriting, it can all be done with the contingency and the knowledge that someone else is already working on the financing on the sale. And then basically you can get the clear to close, and then the final condition is to get the CD from the sale of the house, because that's where the money is coming from, right? So you can literally have it where you close on Friday, you go in the morning, sign all the paperwork on the sale of your house in the morning, and then same day in the afternoon you would sign all the paperwork and documents on the purchase. Okay, so it can be done the same day, so you don't have to worry about living somewhere in between. And that's in a perfect world, perfect scenario, right? And then the funds would be transferred between the title companies. You wouldn't even see the money from the sale. It would go automatically on the purchase. But in this market, it gets a little bit trickier because there's not much inventory out there. So again, you really need to have an A team in your on your side, and you need to have an A team, great agent, great loan officer, so they can coordinate it. But in a perfect world, you can close on the same day, so you don't have to worry about finding a place to stay, or you don't have to sell your house and then start the process. And but if that's the case, if you're in that position, the options are short-term leases. You can look for some kind of rental for 3 months, 6 months. Can get a little tricky. It's hard, obviously. For 12 months, it's much easier, but maybe short-term lease, maybe Airbnb, maybe some other options, but your agent would guide you through that process as well. I hope you find this information helpful. So make sure you smash that like button, and don't forget to subscribe and hit the notification button so you don't miss any videos like this in the future. If you have any questions, or if you're in a situation like this, make sure you drop a note in the comment section. Once again, thank you for watching. Make sure you check out this video over here, and I'll see you in the next video. Thanks for watching.